rubber industry market review. In this session, as you know, we were focusing on the natural rubber market review. We have Mr. Jom Jacob, a well-experienced and internationally recognized rubber industry analyst. He will be discussing about the natural rubber market review. Jom, sir, over to you.
Hi all, welcome to Natural Rubber Market Review. So let us start with the observations we made in the last Monday's market review. So our specific observations or expectations we shared last Monday were: number one, possibility of rubber futures to be weighed down by external factors, external in the sense factors which are not directly related to supply or demand for natural rubber. These factors external to the rubber sector going to weigh down rubber futures. That was one of the observations we made regarding the markets during the last week. We expected that speculative traders would be extremely cautious in view of the risk and uncertainty arising from the escalating Russia-Ukraine conflict. Another factor causing uncertainty in speculative trading is a potential further move by the US Federal Reserve. So we expected some kind of a downward force on rubber futures. That was one of the expectations. And number two, we expected physical market receiving strong support from seasonal low supply, strong support in the physical markets. And also we expected China's presence in the physical markets as trading and manufacturing activities resumed in China after the long holiday for the Spring Festival. That means we specifically mentioned the possibility of futures and physical markets exhibiting divergent trends. That means we expected that physical market would be getting strong support from favorable supply demand fundamental, and on the other side, futures market likely to be weighed down by risk and uncertainties, largely rising from the Russia-Ukraine conflict. So these were the expectations we made, and as we mentioned earlier, so we are going to review what happened with reference to what we have expected last week. Let us see how the market performed last week. Let us start with the physical market. Physical markets, around 70% of the world trade in natural rubber is in the form of TSR, technically specified rubber. And we have two important markets for TSR. One is Bangkok, FOB Bangkok STR20. And the other market is SMR20 Kuala Lumpur FOB. So Bangkok STR20 physical market averaged 2.4% higher during last week compared to a week before, 2.4% higher. But Kuala Lumpur SMR20 market averaged 0.5% lower. So means last week there was a divergence between the STR20 Bangkok and Kuala Lumpur SMR20. So we will see later on what is the cause of behind this one. Then coming to latex, latex constitutes around 15% of the world trade in natural rubber. Latex, we have two important market, physical market. One is Bangkok and the other is Kuala Lumpur. Latex price in Bangkok averaged 6.9% higher during last week compared to a week before. But Kuala Lumpur market also, Kuala Lumpur market averaged 5.7% higher last week compared to a week before. Coming to RSS, that is another form in which natural rubber is traded. We have two important markets. One is Bangkok RSS3 FOB. Bangkok RSS3 FOB averaged 3.9% higher compared to a week before. But Kottayam markets, RSS4 Kottayam in India, averaged 2.9% lower. So in Kottayam, actually, there are specific domestic factors influencing the price of RSS4, domestic RSS price in India. So most important observation regarding the Indian market, RSS market in India last week was the nearly total absence, or I would like to say a relatively maybe less active presence of tech companies in the physical markets, because tech companies are right now, they are more focused on the company's financial performance during the last quarter of the fiscal, I mean January to March quarter. So companies are more focused on the financial performance of each company and also equity prices. So for that, they have to squeeze the inventory cost. So that is a reason why the companies are staying away from the market. So that this can continue until they maybe tech companies can continue less active until end of March. And but at the same time, we have to expect aggressive buying by Indian tech companies after March. So this is something very peculiar situation in the India scenario, and the off season also has started, especially the southern part of Kerala. Kerala state is accounting 70% of the production of natural rubber in the country, and in Kerala southern state the off season has started, but at the northern part of the same state production is still continuing. So the off season will be starting very soon. So this is the overall picture of the physical market. Coming to futures markets. So what was our expectation? Futures market will be weighed down because of the risk and uncertainties that will be discouraging investors. That was our observation. Against that observation, what happened? Let us see. Shanghai futures markets averaged 2.2% lower last week compared to a week before. Cyclone TSR20, I mean the May contracts average 0.4% lower. Osaka, but at the same time, Osaka RSS3 contract for expiring July averaged 2.2% higher. So we have different trend in the Shanghai markets is 2.2% lower. Cyclone TSR20 is lower, but it's only 0.4% lower. But at the same time, Osaka RSS3 averaged 2.2% higher. So that means we have some divergent trend in across the three futures. So we have 4 charts here to compare the price movement in the three futures. Let us see the 4 charts right now. Let us see the 4 charts. So we have chart number 1. This chart shows the Shanghai futures market that is shown in the blue line, and we also have the STR20, but the physical markets STR20 Bangkok. So we can see that actually the two are divergent. So that means STR20 markets continued the uptrends regardless of what is happening in the Shanghai futures market. But Shanghai futures markets it's fell regardless of the favorable condition prevailing in the physical market. That means Shanghai market was actually weighed down by the risk and uncertainties largely arising from the Russia-Ukraine conflicts, and Shanghai market did not respond to the favorable conditions prevailing in the physical market. This is one important observation. So we will see the second slide, another slide. This is a Shanghai futures market in comparison with the SMR20, that is physical markets of SMR20 Kuala Lumpur. Kuala Lumpur SMR20, one peculiarity is that Kuala Lumpur SMR market is a little bit more sensitive to the Shanghai markets. When the Shanghai market comes down, there is a tendency it's a greater tendency in the Kuala Lumpur market to come down. So this is something very peculiar in the case of Kuala Lumpur market. Kuala Lumpur is the sensitivity of the physical market to developments in Shanghai is higher compared to the physical market in Bangkok. This is something different. So we have a third slide, a third chart, number 3. This is a Osaka RSS3 futures. So we can see that the Osaka RSS3 futures were moving almost in tandem with the physical price of RSS3 in Bangkok. Here we have to observe that the sensitivity of the Osaka futures or influence of the physical futures or physical market on the Osaka futures is very strong, very strong. This is something different. This is very important. So this means we can see that Osaka RSS3 futures moved almost in tandem with the physical price of RSS3. This is very important. That means the futures market Osaka is almost closely reflecting the developments going on in the physical market. This is something very important. We have one more slide here. Okay, this is SICOM TSR20, that is futures price SICOM TSR20 versus physical price of STR20 at Bangkok. Here also we can observe that the prices are not closely moving together, but at the same time the favorable condition prevail. Actually, SICOM is reflecting the favorable condition prevailing in the physical market. Although it is not perfectly, but it is somewhat. So what we can observe when we go through the fourth chart is that the Shanghai market is actually there's a greater role of speculation, or whatever happened in the geopolitics is reflected more in the Shanghai market, and favorable conditions prevailed in the physical market were not reflected in the Shanghai market. At the same time, the other two futures market, that is Osaka as well as SICOM, they reflected the favorable conditions prevailed in the physical market. This is very important. Now we will continue. So this is observations regarding the futures market, as well as the relationship between futures and physical. So now let us see what lies ahead. So specifically during the week ahead. So during this week, what we can expect? We can expect tight supply to continue due to seasonal factor. So tightness in the supply will be felt in a little bit higher level because larger number of farmers have stopped tapping. That means tightness in the market will be felt more seriously during the coming days. That is a favorable condition, especially to the physical market. The demand is improving. That's another positive factor because several countries are reopening the international borders. That means the transport sector is getting a new, what is called a positive impact coming in the transport sector. At the same time, we have to notice that China's auto sales increased 0.9% in January. 0.9% is a small number, but important thing is that it's a positive number because past 9 months, continuously consecutive 9 months, in the 9 consecutive months, China's auto sales were posting negative growth. The first time after 8 months, China's auto sales posted positive growth. So this is something very a good news for the China's natural rubber demand, because auto sector is coming back. It's a good indication. And physical market, though, that means we have a seasonal shortage of supply. At the same time, demand is improving not only from China, other countries as well, because international borders are opening up gradually in different countries. So this will be reflected in the transport sector. This will be reflected in the demand for tire. So this is that means the supply is coming down and demand is improving. That means the physical market are expected to gain further in the coming week. It's a good thing. Physical market are expected to gain further. But as mentioned last week, we are expecting futures markets not reflecting the favorable conditions prevailing in the physical markets, because futures market will likely to be weighed down by the negative sentiment arising from the further developments in the Russia-Ukraine geopolitics. So every day we are getting conflicting statements. One day we'll be getting, today morning we got the report that a summit between the presidents of the Russia and US will be taken place very soon. But just now Russia has denied such as nothing has decided, no concrete plan decided. So just now we received the report that the global market, equity market came down because of the Kremlin's, Russia's statement that no concrete plan has been decided. That means we are getting conflicting statement every day from both sides. That means these uncertainties and risks arising from the Russia-Ukraine conflict is likely to dominate the sentiment in the futures market. That means the speculative investors will be less active. They'll be adopting a cautious strategy in investment decision. That means we can expect physical market favorable conditions not fully reflected in the futures market. So likewise, in the previous week, we are expecting physical market going well, continuing the uptrend. At the same time, futures market need not reflect the favorable condition. So at the same time, I would like to add that latest market is expected to perform better related to TSR RSS because latest processing companies are expected to offer a premium price for the fresh latex. So latest price is going to is likely to perform relatively better compared to TSR. That's all about the market review and outlook for the this week. Thank you very much, and see you again next week at the same time. Thank you.
Okay, that's the end of the natural rubber market review. Thank you, Mr. Jom Jacob.